U.S. holiday shopping season kicks off with a big bang. Black Friday store sales up almost 7% and online sales up 24%. Over in Europe, the Eurozone considers a tighter fiscal union to save the euro, and U.S. futures stage a big rally after the worst Thanksgiving week for stocks since 1932. I'm Alix and the Morning Call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Alix with The Street, and together we bring you Morning Call. And if you were off on Friday, welcome back from your long holiday weekend. U.S. futures are up big today. Scott, is this sort of a change in sentiment, more optimism, or are we looking at, say, just an oversold bounce? Are we looking at some short covering?
At this point, we have to treat it as an oversold bounce. Since the wedge resolved to the downside, we've been down almost 8 to 10%. Last week, you had the headlines, the worst Thanksgiving week since 1942. So 1932.
1932,
wow,
yeah.
That's a long time.
1942, if you count the fact that Roosevelt then sort of said that it was going to be the fourth week in November was going to be Thanksgiving. But anyway.
A big down week.
It was a bad week.
So with all that said, we were very, very, very oversold. The oscillator minus 100. So you mix that up with some headlines of good holiday sales, perhaps more physical union in Europe, even though it's not set in stone. You get a bounce. So the question is, where will the bounce go to? How do you trade it? How do you treat it? How could you make money from it? And how could you put yourself in a position to win? And that's what we have to look at moving forward this week.
All right, so let's look at some resistance levels you might be looking at and how you're going to be trading around them. Because if you come in today and you're flat, I mean, you can't really chase it here, right?
It's hard. There's an art to trading the same way when you're down 300 points to up 300 points. You don't want to buy it on the open. You want to see how much of this gap do we hold, and then you want to use some hourly resistance. But first, on a daily level, take a quick look at the chart of the SPX. You will see ever since this range resolved to the downside, back on, what was it, November 16th, you had about almost 100 handle move to the downside. So even if you got out of your longs here and got short, you should have covered into this zone. Okay, so if you're short today, you deserve to get a little spanked around. But if you're not long, which there's really no reason to be, you need to see where we can go. So on a resistance level, I think that the moving averages start curling down. This is one area right around 1192 to 1195. And then you're going to see a huge resistance zone coming into this 1206 to 1215. If you take a quick look at the spiders, because a lot of people trade the spiders versus that, I put this in the Express. This is resistance one area, about 119.11 to 120.35, which is under that gap. Then if it gets into the gap, you have the 50-day moving average around 120.65, and then a huge zone in this 121.50.
So then does that mean if we sort of are able to hold the 119, 120 level on the spiders, that then you'd be looking to add long, take advantage of that next bounce?
Well, let's see how we handle going into there first. And if we go into there first and we hold and then maybe get an inside day, then you get a better trade into the next zone. If we push through resistance one and get right to resistance two, I bet you a lot of traders are going to try and short that because that's going to be too far, too fast. And if we do too much of that in one day, then it's like you're not leaving anything left over for people to trade, and then that's when frustration sets in. So just have those three zones.
Yeah. And I was going to say, also keep into account Friday, what we saw is that you had the rally in the middle of the day, but then it couldn't hold it, and we ended right on the lows.
Right, and that's what got a lot of traders out of their stocks.
Right.
So we had a good trade Friday morning. We were down like 5 handles. We went up like 10. A lot of traders were happy going into Thanksgiving weekend. I even put it on and I wanted to trail it. But then all of a sudden, as I'm driving up to the vacation home to hang out with the family, I look like an investor, and I got stopped out. We closed on our lows, and I was like, all right, this market's that weak. And then you come in today, and they just want to stop, and they want to make as many people look bad as possible in this market and make it as hard as possible, which just gets frustrating at times.
Those evil stock market elves. Okay, so let's go to the sectors that you really want to be paying attention to. We want to hit on retail. We're hearing lots of news about that today, of course. Black Friday sales in stores up almost 7%, online sales up over 24%, and today is Cyber Monday. Is this kind of spending sustainable? I think it's a question that now a lot of people are asking. And are we seeing a lot of retailers sacrifice margins and profits for sales? And will that actually weigh on the retail sector?
I think that they've put a lot in place in order to do well, starting early, like you said, having their prices lowered so their margins are affected. But right now, the group has been holding up best. If you look at the RTHs, you will see that it also has been holding up well. It held much higher than some of the other sectors. So at this point, a lot of retail stocks have been good macro investments. For right now, I'd like to see if the RTHs can get up and fill this gap. A lot of these groups have open gaps in front of them. We'll see which ones could get filled to see if they can negate some of the downward pressure. Right now, about 109.65 on the RTHs is a zone to watch because some will try and sell in front of that. So we need to see if we could punch through it or if we fail there.
Is this a sector that you really want to be paying attention to today, or is there a different sector that's kind of on your radar?
Well, you want to make sure they just don't sell the news. Because if retail's the reason why we're up and all these stocks gap up and they're the first ones to fade lower.
It is a good indicator then.
Yeah, then I think a lot of traders will be skeptical because a lot of these stocks have been stronger. If you take a quick look at like Decker, Deck and Under Armour and Lulu and all these Macy's, they'll just take Macy's as a barometer because it's like across the board here. It's still above the 50-day, well above the 200-day. It's holding in well. Can't get above this area. Maybe some retails will get momentum above 31. And then you have a move back up. But right now, there's really no momentum in any of these names. They're just kind of trying to hold steady up there.
Now, what about in oil, in particular the OIHs, because oil price is holding around that $100 level? Is this a place that you'd rather be looking at to get some juice?
It's really a little nutty that oil's back over 100. Everyone's talking about calamity around the world, and you had to pull in oil from 102 down to 96. So I think this group could have some juice. There is some talk in the OIHs that you're seeing a bullish pattern start to be put in place here. I'm not in that camp yet. This was the wedge that resolved to the downside. But if you take this out of the way, okay, you take this wedge off the board, so to speak, some are starting to say that you're getting a bit of a reverse head and shoulders pattern, where here's the left shoulder, here's the head, okay, here's the right shoulder. And then if this marks the bottom of this area, you're then going to get a neckline. And then if we do rally, then this will be the area that we break above for a bigger move at some point next year. So those trying to build in here, you could maybe trade long versus Friday's low, and if that's the bullish case for this, you're going to see a much bigger move in these stocks.
And definitely watch Brent to see what it's doing. Are we going to see WTI track Brent, or Brent come down to WTI? And that's also going to be a big indicator for whether or not we're going to see a big rally.
Yes, it affects their margins as well.
All right. For the oil services. Exactly. Okay, here we go. Want to go to the financials, one of the strongest sectors on Friday, but I heard it was a lot of short covering because nothing fundamental has changed. What do you see in the charts?
I still see a broken group, but there was like one grasp for like, could these things put a double bottom in? I know we spoke on Wednesday. I'm like, you know what? Let's look to see if Goldman could hold versus the October lows. Let's see what Bank of America does. And for right now, take a quick look at the XLF. It's not so crazy as far as a pattern, but it did go green. It was one of the first ones on Friday. And now see if it could get back up to this 1224 or perhaps a little higher. For me, I was watching Goldman. It was strong on Friday. That gave me a little, I'd say, energy to be long. I said, watch it versus this October low. So at this point, some might say you have a bit of a double bottom. So if Friday's low is the low, it could bode well for the group. First, it's got to start getting above this 91.5 and staying above there, and then obviously huge resistance around 98. So you have to really like almost segment it and say, what am I looking for? What's my time frame right now? If you bought Goldman for what could be a bigger move and a turnaround in the banks, you better trade it versus Friday's low.
And rounding it out very quickly, I want to hit on tech. We're going to talk about the chip stocks in just a minute, but in terms of the overall tech sector, how's it shaping up?
Well, what's unfortunate is that this went from one of the strong groups with retail to it went to the downside real quick.
Right.
It broke below its 200-day. I think a lot of people lost a little bit of luster on the tech sector. But when these things bounce, they bounce quick. So just watch. We'll put the Qs real quick because we're going to talk about the semis. As I said, it broke below all the moving averages. It could also bounce back. You have a level here that will be protected. This is the gap, and then this is the gap fill, and then just overlay the stocks you're trading with it.
All right, and we will be right back with the semis right after this, so stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
All right, let's get in the trenches here with chip stocks. Now, Scott, the reason why I wanted to highlight this is because I read a note from Wells Fargo recently. They were dissecting the durable goods orders for October. And here's what they said in terms of the computer and related product shipments. Up over 2% month on month, up over 6.5% year on year. orders were down just slightly and inventory fell 2%, which, by the way, you could argue they'd have to do some restocking in the next quarter and the following months. Now, Wells Fargo sort of highlighted the Micron, Advanced Micro Devices, NVIDIA, and Intel as their top picks. And I wanted to see if the charts were sort of correlating to this kind of underlying bullish thesis. And I think we're going to start with the SMH to just see overall how the sector's holding up.
Okay, what we like to do is you want to look at the overall sector versus the NAS versus other sectors to see if you see relative strength that could go with the fundamental thesis that does make sense. So if you look here at the SMHs, you will see that you did have a move lower from this 31 area coming into some support. It doesn't look like it's holding up much better than things right now, closing the lows like many other sectors and groups. But at this point, you got to measure moving forward because it's something of a forward indicator as far as these inventories. So this is a group that can move fast, and you might want to find stocks within the group that are holding up better than the overall ETF itself.
Right, as Wells Fargo said, it could be one of the stronger of the electronics end market. So again, you're kind of playing that future pop. So in terms of individual stocks, I want to go to Micron because it got hammered on Friday. Considering this bullish underlying thesis, it really got killed. Is it showing any signs of life here?
Well, Micron is something that it's like a name from the past, and maybe it's trying to reinvent themselves because sometimes it does that. I haven't traded in a while, so what we'll do is we'll take a look at the chart to see what's going on here. At this point, you can say that it's holding within the moving averages. Something very exciting must have happened right here. I don't know what that news was, and it came all the way back in. I would say if you want to be long Micron, it is a cheap stock. Buy it versus this $5.50, $5 area. If it doesn't hold this $5 area where there's a lot of support, it's in trouble. So, if you didn't chase this excitement, good job. If you want this fundamental thesis, you could buy it versus this $5 and use that as your stop.
Now, what about NVIDIA versus Advanced Micro Devices? Because AMD has kind of been gaining share from NVIDIA. How do these charts sort of stacking up against each other?
Well, NVIDIA seems it's friskier than AMD, obviously. AMD, they say the only reason why it's in business is so Intel could not have a monopoly. But if you look at NVIDIA right here, there was some news out there that it was going to be in, remember it was unconfirmed in the Mac?
Yeah.
And I do see a nice pattern here, nice channel. It's within the moving averages. I would say if you're in this for the long term, you have a nice tier 1. That's cool. If it starts to break above $15, you can get some momentum to the upside. This stock looks a little bit better. At least it's got a channel and a pattern to trade against. I would say tier 1 at best versus these lows here of about $13.50, and if it starts getting above 15 to 15.25, I would add for a momentum break to the upside, especially if this group catches some fire.
And what about Intel? Because that went green on Friday versus all these other stocks.
Well, Intel is more of an institutional favorite.
Right. That's
something I'd rather have you in your account first.
And you have to wonder if we do see any kind of Santa Claus rally, if Intel in this group will be the only one to go.
Well, it could be one of the first of choice because you have the dividend, you have the liquidity, you have the name recognition. If you look at Intel's chart, you will see that it came in with the rest of the market. It's still above the 200-day. You never want to chase an Intel because you can't buy these mega caps in strength. It usually doesn't work. So if you wanted to buy some, you buy some versus 22.50, and then you have resistance around 24, and this is something that you could hold. So I would say if you want to have semis, have Intel and choose one of the other ones. So to me, I think like Intel and NVIDIA would be a good little combo.
And in terms of Micron, for those of you who wanted to know, that big pop was actually an antitrust ruling in California in favor of Micron. So it wasn't any sort of earnings or long-term outlook kind of thing. It was just a ruling that we saw earlier in November. All right, so let's go to some quick ways to make some cash. Let's stay with tech. Let's go to Apple right around that 363 level. Close there on Friday. If we do get a bounce, though, and it holds, where would you be buying this?
Well, I think it's up like $9 pre-market, and it closed weak. This was one of the reasons why I got out on Friday, because the Dow was up 60 to 80 points, and Apple all of a sudden didn't make new highs and started to go negative, went down 3. And if you look where it closed, pretty dangerous. Apple closed on, through the 200-day, and this longer-term trend line that I have intact that I was drawing, the last time we were here, which, it didn't close below and didn't get crazy, but that's a level to watch. So at this point, let's see what kind of bounce. Let's see if it's sustained. First level of resistance would probably be right around here, right around this 378. This is an area, that could be a little resistance, and then I'd say more like 382. This is where people will probably try and re-short it.
I mean, we're saying that 360 level is where sort of the people who own it for their portfolios are going to have to come in and defend it, and it seems like for now that did hold.
Well, they didn't defend it on Friday. Right now you have the futures up like, 30 handles, so Apple goes with it. So it'll be interesting to see if people sell into that. So Apple's something to watch. So you want to see a stock like Apple go up 9, close up 14. That'll show it some health. If it opens up 9 and closes only up 3, you know this market's weak and this oversold
Right.
bounce might not last.
And I think then we can also say the same thing for Amazon, that if we're watching retail for the same kind of indicator, Amazon in particular, it's one we want to watch for that.
Exactly. If they can open up Amazon and then give you room to buy it intraday and then close it strong, you will also know, considering it's in all those spots, it's in retail, it's got the
tech,
handheld,
right.
it's the cloud, all of them, and it's been battered and bruised. So if that can close strong, you know that you have to be a bit more cautious as we move forward.
Apple, Amazon, two stocks you want to watch. Okay, what about Walmart here? It's near 52-week highs. Is this a good way to play a kind of post-Black Friday pop or something?
I think this has been a good investment for people this year. It just shows you how sectors could change. And I know people are like, oh, you can't buy Walmart, you're parking money. It's been in a range for 8 years or whatever. But this year it woke up, so you can time it. This was a spot we said, get involved with Walmart when it broke this downtrend. And look how it's held higher. It's above the 50-day, above the 200-day. This stock, to me, could be one of the candidates to help this market. For momentum, I would say it needs to hold above 57.50. I wouldn't be just chasing it and entering a new position up here, but if you're in Walmart, stay long Walmart. I think you have a good one there.
And two quick stocks here. I want to go to WYNN. Got an upgrade today to buy from hold at Key Bank. Is this enough for the stock to kind of get a boost, or is it just breaking down?
I think it's a short-term boost. This group has tried to hold up well. It's very streaky. Okay, this group looks great, and then it starts to fall apart, and as it looks its worst, it starts to bounce. So still, if you're a macro tier 1 investor, that's fine, but look where it closed. This group is getting weaker. I haven't liked this pattern for a while. I haven't really spoke about WYNN in a while. So PS, I wouldn't be chasing this. It could fill the gap to 120, but that would be a sell.
And then Caterpillar, what kind of story is going on with Caterpillar?
Caterpillar is one of the things you want to hold. It's a macro investment.
Right.
We've had that on the list. It did try and hold up a little bit on Friday. It pulled back. It's still above some of the moving averages. This one you have to time also, unfortunately, but it's coming into support, which was an area it's going to be opening up. I think that Caterpillar is a hold, and as a trade, if you long it, maybe sell some into this broken resistance around 92.50.
All right, and then I want to round it out with Randgold, one stock I'm definitely going to be watching today. We got some news over the weekend that's lowering production guidance for 2011 for the second time this year, now expecting about 690,000 ounces of gold versus on the high end about 790,000. So this could be a big bummer for the stock that's done really well. It was closed at around 103 on Friday. It had been in the 52-week highs, 119, 120. But fundamentally, nothing's really changed. These are production glitches. This was weather issues. This was mill related. They're getting the mill replaced. They had union negotiations, but they're now fixed. All the normal stuff that comes up with miners. And to me, this is going to be interesting to see if how low it does go, or if it can hold up, because gold's having a nice rally today.
Well, at least it's not at like 118, 120. If it was at the highs and it came out with news like this, it would get crushed. So the question is, did they pull it in enough to absorb some kind of headlines like we're seeing here today? So if you look at the chart, you will see, hopefully I'm putting up the right one.
Yep,
yes.
that's it.
It's already discounted, but it's still well above the 200. It's above other support here. Is it opening, what percentage it's opening down?
I don't know.
Okay, so I would say watch this 100 area psychologically. This is real support. Coming in here around 96, 97, right around this area. Maybe they give it a pass. It's on a positive day. Maybe
they gave it a pass on the third quarter and its first lower production guidance. So we'll see. If it'll get a second pass, that'll be huge for the stock. If it doesn't, then you got to watch that $100 or $98.
Yeah, exactly.
All right. That's it for us for today. Welcome back, everybody, and happy trading. I'm Alix Steele from The Street.
Yes, and hopefully you enjoyed your family. Hopefully you're ready to roll. This is going to be a long week with a lot of headlines, a lot to look at. We have the jobs number later this week. So just, don't chase this big up move, but, it could create opportunity, because last week the trade was getting very stale and very old, dripping lower. So this shakes it up. It makes the shorts have to be a little bit more honest, and it's showing you that you don't want to fall asleep in the market, that there's still opportunity, and you could make money on a day like today or moving forward. So, join us on the virtual trade floor, the chat, and if not, we'll see you at the recap. Have a great day trading.